Very good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today's focus is going to be on strategy, as always on Wednesdays. We're going to have the Forex focus and take a look at what kind of opportunities there are in the market today. First of all, though, be aware that this webinar is intended for a global audience. It may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information. No, sorry, that's a different disclaimer. Please take a look at this link, admiralmarketsglobal.com, to select your country of risk. To select your country of residence and contact an appropriate entity. This is the other disclaimer, which I unintentionally started too soon. The risk disclaimer states that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. In case you're joining the webinar for the first or perhaps second time, you're maybe not aware of the fact that Admiral Markets has won the MT4 Best Broker UK Award this year, and definitely partly due to the MetaTrader 4 Supreme Edition. A lot of extra features, 56 in total, ranging from alarm manager to sentiment traders to the calculation of the lot sizes based on your risk profile that you can input or place in the calculation. So there are a lot of good things. Take a look at admiralmarkets.com. Alrighty, let's take a look at some things like the calendar, and then we'll take a look at the live charts. First of all, today we have, let's take a look. Got dollar news, apparently a lot as always, and some lighter European news. Nothing much really to be, no red tag news events in the next hour or so, or next 2 hours, I think even. 1:30. All right. Besides that, just wanted to let you know that Nenet wrote a blog. The blog is back into action. You can see that before that there were some posts, but maybe not as frequent. That will change. That will be becoming a bit more used. Twice a week is the plan for the next few months at least. So now that already kicked off with a post on Monday, I will post one later today, most likely in the afternoon my time, probably about 7, 8 hours from now. So if you want to take a look at that, how to stay confident and believe in yourself as a trader, you can find that. Just go to analytics as always and then click on Trader's Blog. As you know, you can already find a lot of analysis, but Trader's Blog will be active as well. So something, if you think it's interesting, take a look. And last but not least, we can take a look at, for instance, the market sentiment. You can see that most people are at the moment short on the euro dollar, long on the gold, pound USD, short as well, euro Swiss short. So you get a bit of idea about that. Yen long, and from a heat map perspective, sorry, Hewlett Packard, big winner yesterday. Let's take a look at the currency pairs. Pound odd, pound CAD, pound New Zealand. I talked about the pound weakness that I thought was developing yesterday, for those that remember perhaps. And I think that definitely played out. Well, first of all, looking at this heat map, you can definitely see that the pound was losing against a lot of these currency pairs, against the yen as well. The pound USD is there as well, but made a bit of a rebound at the end. That's why it's, didn't have a net change that maybe reflects the bearish momentum during the day, but it did end up negative. So yeah, pound weakness dominating here at the moment. Pound Swiss here too. 5 pound pairs in the top. Euro odd as well. Euro New Zealand. Odd USD as well. We talked about the upside potential. That one almost hitting 1%. So odd strength also kicking in there. So let's take a look now at what's going on in the market. And bear with me with my my voice, maybe, perhaps, I'm not sure. But could be a bit more shaky because I have very tiny cold, perhaps not even that, but somehow my voice is a bit affected. Good morning, Beverly. Good to see you. How was your trading yesterday? Anyone have Let's see, Beverly's an EU long, okay. Based on the divergence. 45 pips up on the EU long. Cool. We'll take a look at that. Any other trades? Did you take the pound dollar long short and the Aussie long by any chance? The pound dollar short did work well. We talked about that. Did anyone else take any trades? Anyone else take trades based on yesterday's market developments and perhaps the analysis that I talked through in the morning? Let me know. Always interesting, and maybe I can take a look at open trades like Beverly's euro dollar, for instance, or we can review close trades that went well or didn't go well, perhaps. I'll show you what I discussed yesterday, at least, and I will take a look at what could happen today. I wanted to first show you the AUD. What I was saying, I hope it's not boring for you, but why I do this is because I want to show what I said and how it played out. And because when I say it sounds very futuristic. When I say it yesterday, I said I'm waiting for that and that to happen. And I don't know how people how people see that, like yeah, whatever. I don't know. Or is it something you really like write down? I don't know. So that's why I want to show you like what I meant, so that it's perhaps easier next time to envision or imagine what I mean in a way, if that makes sense. So just quickly, um, what I was saying is like I would like a candle close. Wait, let me open a drawing tool. One second, folks. That takes 2 seconds. So what I was imagining was this fractal right here, right? A break of that fractal by a candle close. That's a resistance spot. Candle close that is above it and near the high. So a candle like this, for instance, right here, would subscribe to that. That's the candle kind of what I was looking for. Sorry. Let me put a green circle around it. That's the candle I was looking for. That's what I consider the breakout candle. Then I said I would like a retracement probably about halfway that candle. Most likely, I said to the same resistance level, which is 7207. All right. So the next candle retraced the breakout candle. Let's put it once again a green circle around that breakout candle. So that's the breakout candle. So I don't have to repeat that. So and one way is just putting a fib on that candle. And normally a 38.2 or 50 fib would be typical. So that's, yeah, it's about 7210, 7206. And yeah, you can see that it worked nicely indeed. And now it's up about, well, you can see, etc. So if you're in that trade, this is what I meant with the entry at least. Now you understand. Now you can visually see what I meant in words at that point. And if you're in that trade, I would probably trail stop it below these 4-hour lows. On an hourly chart, maybe it could be even worth trail stopping an hourly and going below this fractal, which is probably about the same. That could be one way, locking in probably roughly about 40 pips, which is not bad. The stop loss I was saying probably would be okay here at 71.180 because I said I think a tight one makes sense because a looser stop loss, well, I don't want to repeat everything here, but I thought a tight stop loss made sense. Would have been probably around 30 pips. So that's already a 1.3 to 1 with a trail stop, and the trade is still open. It's about 60 pips right now, which is about 2 to 1 trade, 2 to 1 R2R at the moment. The target I do think could be a bit higher, which is minus 272 target, about 72.90, which would offer a bit more, as you can see. Right. So those are some options there for the trade management. I mean, you could even are even higher, 74.30. But as I said, that's a pretty big move yesterday. That might not happen this week. So it depends how loose you want to trail stop it. If you can leave it at break even and see how far it can go. That's another option. You got Several options as always, but depends on which one you find the most interesting. Whether you want to go for a bigger run or take the profit now. That's always everyone's choice, obviously. But I think there's plenty of space to move it to break even or lock in profit or take profit now. So that's the odd USD. Anyone who's not in that trade and thinking, okay, I would like to join that trade, um, then I'm not too sure at this moment. Probably need a bit of a pullback. I mean, let's see. Let's go to the 50-minute chart. I would probably have nothing against new longs, but I would like to see this target hit first, 73. I would then like to see probably a mild bull flag kind of pullback down to these moving averages, and then a break of that bull flag. And then once that bull flag breaks, the minus 272 has been hit. There's been a retracement from the minus 272, and you should have a breakout to the next target, which is the minus 61.8 target at 73.60. You see what I mean? So this target has to be taken out by going up to it, retracing from it, then continuing, and then we could consider the next target to be viable, and I would have nothing against taking a new long. Now, if the target's so close by, I rather trade management the original long instead of adding to this position, unless what I just described happens. Okay, so that's the odd USD. Quickly, I think that's it. Let's take a look at the euro and pound now. Let's see. Beverly is writing. Let's see. Oh, thank you very much, Beverly. That's really much appreciated. Very nice words, very kind words of you. And it's always good to hear, obviously. So thank you very much. Your dollar, yeah, making a bit of a rebound here, not all too much either, kind of a corrective. And can see why Beverly's a bit worried because prices at resistance, trend line, it's been choppy to the upside. Um, yes, those that took along yesterday probably are up depending on where you took it because I was saying there are a couple of options. One of them was taking it right away, right in here, I think somewhere. The other was if it goes lower, which didn't happen. So that is out. Or if there's a candle close above the fractal, right? That could have been one. But if I remember correctly, I probably also said, yes, I know for sure now, that because it's in a downtrend, wait for a pullback, which kind of happened roughly here. So most likely there were, three viable options, I would say. Right away, the pullback, or the break and pullback. So one didn't happen. The other two did. Uh, Both kind of, the ones that did roughly had, I guess, indeed about a 106.40 entry-ish kind of moment. And yeah, about plus 40-ish at the moment. Now, Beverly is saying maybe an hourly fractal makes sense. And there is a lot of merit to that because you can see there's higher lows at the moment, good trend line support. So if this trend line breaks, if price breaks through the support trend line, then yeah, the whole environment, the idea here is changed. The structure is changing. This could be perhaps a bear flag, corrective channel, corrective formation. And if we put a fib from this entire downside on the hourly, okay, it's not a bear flag anymore probably, but still, obviously this structure here, this downside is dominating the chart. And if we get a slow crawl up like this and we break a support trend line, we shouldn't be surprised if price starts to make some downside, perhaps down to that green line or even further and make quadruple divergence maybe at this trend line here. So yes, I think that makes a lot of sense. If you're in a long, I would probably, if I were to offer my analysis on it, then I would say that makes sense to trail stop it below this bottom indeed. Now, what could the target be? I was talking about 110 yesterday. Does the current slower crawl up change anything? If we put a fib here, let's see, we hit the minus 61.8 target. Well, probably I think 107.50 could be okay because it's still resistance here. It might hit that level, hit the target, and make a deeper retracement before maybe making a bigger move up. So it depends, I guess, how aggressive you want to target. You can always leave 109.80 on, but and trail stop it, and take more of a swing trade approach to it. If you want to have a more a shorter trade setup, then probably 107.50 indeed. I agree, Beverly is a good, I think, good in between target, which could cause a significant pullback before perhaps continuing. So that makes sense to me. And a trail stop makes sense to me. To at least take the risk off the table, I think probably lock in a couple of pips, depending on where the entry is, maybe even up to 15 max, I would say probably. Um, it's better than nothing, better than losing, and it's a no risk trade, free trade, profits potential because price is still making higher highs, slowly trying to break through this trend line, perhaps bullish price action, so it could continue and break these two trend lines. They are resistance, and that's why it's good to move the trade to break even because it could turn around. But at the moment, it's at a bounce or break spot, and we could just, from that point of view, just sit back and watch the show without being nervous about it. That's the good thing. So we're going to get the push up. There is double divergence. We talked about it yesterday a lot. There is an 88.6 fib here at 106. We got a yearly low at 104.50. Triple divergence, kind of a falling wedge pattern. So there are things to consider, pretty strong reasons to consider a potential rally. Um, no, what'll happen? We have to see. I mean, I said 5 to 6 candles, not breaking that bottom yesterday. 1, 2, 3, 4, 5, 6. This was the 6th candle. This is the 7th. That could have been another entry right there on the 7th candle. And we're in a correction zone because of that. Um, so I would not be looking for shorts that much. Yes, it could turn around at 107.50, or it could even turn around here at resistance. But considering all the reasons why it could go up, I would not be that interested in short. Maybe if it breaks the support trend line. Honestly, probably not even that because of the triple divergence. I don't like triple divergence on a 4-hour chart. And so could it continue lower? Yes, it could. Am I interested in it? No. Um, so probably would skip downside unless it really hits the long-term moving average at the very minimum, I would say. That would probably be what I would want to see before shorts, I think, could be, again, interesting. Just too many cautionary signals that downside is not as probable. It could happen, right? Maybe some market forces are just so overwhelmingly bearish on the euro and bullish on the dollar that it could just keep pushing despite all these signals. But I would not want to trade that. All right, pound USD. I think it still remains shorting territory. On Monday, as I said already yesterday, on Monday's video, all these pullbacks I can consider shorts. So this could be the same. I was talking about shallow pullback, I think, potential this week. And I think that has happened twice and could happen again, really. Um, but let me take a look at the 15-minute chart. There was divergence between these bottoms, but we've hit the long-term moving average, so that's out of the way. And on the hourly chart, We don't have that divergence yet. So I am not expecting price to make a bigger pullback to the moving average from that point of view. So from that point of view, this could be a breakout trade. Yesterday, there was a 5-minute chart trade that I talked about, which was this. And this is something that I think is cool to use as the oscillator. I said that if it should, here I said it should continue a bit lower, otherwise it's not interesting because it has to break out and show strength to the downside. And if it doesn't, then the breakout's not looking good. If it does that, then I would look for a pullback to the 50 fib. So if one did that on a 5-minute chart and look for the oscillator to go back to the zero line, which is here, and this was then the setup, the 50 fib, about 151.25, because I already made a future fib, and that was the entry, 151.25, stop loss here above this top for about 30-ish pips, and talked about a conservative target at 150.70-ish and a more aggressive target at 150.10. Conservative target hit, aggressive target not yet, at least. So that you can see now what I meant when the price was here, like seeing that follow through, getting the pullback and continue. So this is what I meant. That was a classical setup, I would say. Let's take a look at the hourly. You can see that I was looking for a strong hourly candle close, which is right here. That was a pretty good candle. All right, back to now. Let's see. Is this pound perhaps interesting now? Because about the Aussie, I said, yes, upside is interesting, but only after a target hit and pullback and continue. Euro dollar, no, not interesting. I'm not interested in shorts of resistance. Not interested in longs now because it's at resistance. So no, not interesting. But the pound is a bit different. Excuse me. It's making again a shallow pullback and breaking this trend line. Right. This channel is in fact a bear flag. Depending on how you fib it, it has hit a 23.6 fib. And therefore, I think that continuation is possible. For our chart, this is the fourth candle, so this is still in the momentum to the downside. The only thing I would like to say is, of course, when there have already been several breakouts to the downside, this can continue for a while. Obviously, though, at one point, a bigger pullback is going to happen. Do I think that will happen now? No. Just want to, generally, give you the understanding that what first pullback, second pullback, a breakout, third breakout, could go well for a while. But eventually, if you go to 4, 5, 6, at one point that breakout is not going to go too far, and you're going to get a bigger pullback and not a shallow pullback. So as the breakout numbers increase, you just want to be more careful about that. This is number 3, but there's divergence on the 50-minute chart, but that has been already removed because price went back, as I said. 30-minute chart is divergence, so price could go up to the 38.2 fib, but the hourly does not have divergence and should break this bottom. So what is the scope? Either a pullback to the 38.2 fib and turn around, or the 23.6 will be used for a renewed continuation of the downtrend down to 150 probably. 150 is the minus 272 target. And what is this bottom? Let's take a look. 150.25. Yeah, that one about there, I guess, should be the target. It's difficult to say. Any 152.25 could be it. 150 psychological or the minus 272 target. It's kind of a zone. And all three could be really turning spots. All right, sorry about that. Let's see. The moving averages are 144 EMA close and 21 EMA close. 21 EMA close, 144 EMA close. One is representing momentum slash short term. The other one is intermediate or long term, depending how you look at it. Uh, Sometimes I use bands like a high, low, and close, 21 EMA, high, low, and close. So you get three moving averages, so it shows a zone. And this is a special moving average because it shows the angle by showing a color. So green is bullish, orange, purple is bearish, which is just not necessarily needed, but I just easier for me visually. And if you like this indicator, I can send it to you. No problem. Just send me an email to the following email address. I find it very pleasant to trade with. And if you like it or interested in it, that's the email address. And let me know, of course, what indicator you're looking for. This is an MA indicator, moving average. All right. So from this point of view, we got bearish candles. This bullish candle is not that interesting anymore because it's broken. It's not dominating. Bear candles are. So it could be a short, I think, right now. It's always a bit tricky with the London Open. If a short is taken here, I would not go with stop loss here personally. I'd probably go with a stop loss above the 38.2 fib. Well, depends. Either a very small risk and a tight stop loss. A lot smaller maybe risk because the breakout here is occurring at a moment in the market where the London Open has just occurred. London Open has a lot of volatility with it, has a lot of spikes up and down. So that's why I don't like a tight stop loss. And there's 30-minute divergence on the chart, which means it could go to the long-term moving average, which means it could go up to the 38.2 fib, which means that a stop loss above the 38.2 fib at 151, 65, 63, I think is safer. Well, that of course increases the risk to about 65-ish pips, and the target is about, the conservative target is about 70. So it's about a 1-to-1, which is maybe not great for this particular setup. So I'm not very sure about a short right now because of the R2R and the market open with the pound. In general, yes, the characteristics of a bear flag break are certainly there, and this 1 hour candle, is dominating, pushing through this trend line, and a stop loss just above that. Small risk in terms of pips, but of course, if you use a risk management system, it doesn't matter if it's a small stop loss; only the lot size will increase. So if anyone is thinking about trading this, then I would say don't take the usual risk. Take a lot smaller risk and maybe just work with a small lot size and try it out. The scale in, for instance, maybe because of the market open. I don't know, but it could be a pullback. It's just the market open on the pound that makes me a bit leery. But otherwise, it looks that could be. I mean, that could definitely be something of a turning spot here. Let's take a look at the 5-minute maybe. And there's just a 1-minute bearish candle already, which could be the turning spot right there. So, yeah, that's something that that could already give some indication. Obviously, 1-minute candles don't give a lot of clues, normally speaking. But at certain spots, could be even worth it if one is really looking for an immediate turn at a certain point. It could be worth it. And it's indeed falling from that pin bar that we see already quickly. On a 1-minute candle, 10 pips is quite a lot, so you can see some momentum coming in now at that pullback. So, so that moment has passed, but we just talked about it just a minute ago. The other option could be the 38.2 fib. And one more option, perhaps. Let me think about it for a second. Other option could be if you want to take it a bit more easier going, let's say, not as 1 minute is a bit higher adrenaline a bit to a certain degree. So if you want to take it a bit easier, maybe 4 hour chart is good. Take a look at this candle. If this is a bearish candle, wait for a pullback of that 4 hour candle. You could even put a fib on that candle. Wait for a pullback 38.2 fib. That could be a short with a stop loss above it, maybe, or at 38.2 fib. Stop loss above could be okay if the 4 hour candle closes because then the London Open is out of the way and there's a bearish candle, so I would be okay with using a tighter one at that point. I feel uncomfortable with using a tighter stop loss at this point, but if this 4 hour candle closes, I think a tighter stop loss makes sense and is possible and has more value than now. So that's a bit of the difference. That's why maybe waiting for this 4 hour candle to close makes sense, just because I think it's safer to use a tighter stop loss. Beverly took 140 pips off this pound dollar. Wow, great stuff. Let's see, 140 pips is about, I don't know exactly where. Of course, Beverly closed it, but 140 pips would imply perhaps a long, maybe already last week. Let me see, I'm not sure. Probably, yes, indeed. Nice job. Great pips. And doesn't matter that you got out earlier or, um, it's a great number of pips anyhow, right? So that's fine. So that's probably the best, I think, 4 hour pound to USD. No problem, Beverly. It was just doesn't have to be that precise. I was just trying to see for the fun of it. But let's see, Thursday 19th. Oh yeah. Oh great. You took it at this turnaround almost, I think, somewhere in here. Very nice. So that's those three. Pound usually I think has the most potential for today, whereas Aussie and Euro are just kind of holding on to a trade at this point. And perhaps pound two. Perhaps you're still in the trade from yesterday and aiming for that 150.25. Still holding on to this. If you are holding on to it, then if this candle's bearish, I would trail stop above this top. Probably, yeah, I think it makes sense. Or above this candle. Or the other option could be, sorry about that. Yeah, I think it makes sense to trail stop. If this is a bearish candle, it makes sense to trail stop it because then the risk is off the table. An entry at 151.25 could be then put at break even once this 4 hour candle closes and the risk is off the table. And a trader can then wait for hopefully either zero, which is good, or the big profit, take profit at about 100 pips. Dollar yen. Yesterday was looking for breakouts candle, a good breakout candle and pullback. Perhaps you took it somewhere in here because of that, but if not, I don't think it's really a great potential either. So nothing really lost that much. At the moment, it's at a target. It's close to other targets. Um, I don't see really much. It is breaking through the support trend line, so I wouldn't be looking much for longs. No, not for longs at this moment because of the bearish price action. It could be an ABC and a bounce, but it could also be just a beginning of a bigger reversal. Yesterday, a short somewhere here still I think made sense. Now we're at the target, so either I don't know, either it makes a pullback, maybe could still be interesting at this spot for one more downside to make a bigger correction. I don't see any trades that I really like. It's just too much caught, pretty low volatility, pretty slow movements. At support, bearish price action, broke trend lines. So too much of a of a mixture, too much of a mess from my point of view. Okay, Kiwi. Kiwi, I was a bit hesitant in my mind. I'm not sure if I said it, but this trend line break would have been a loss if anyone took that. Um, one of the things I didn't like was the moving averages that were pretty flat. So this would have been a bad breakout. And price actually rallied up, which was something I found interesting once it broke the bigger resistance trend line, where it is actually right now. And part of that trend line has to do with this being an impulse. It isn't a downtrend, but we have bullish impulse and a bit of a corrective channel to the downside. So if it breaks that channel to the downside, there could be that breakout continuation. And that price is challenging that line right now, actually. All right. So from that point of view, what could be interesting? I think that I would like to see a breakout. I wouldn't trade it. I would like to see the breakout and then probably pull back to the moving averages again, to that same trend line and a bounce. So it's going to take some time before I find this interesting to trade, but I'll keep an eye on it, obviously, and see how it reacts at this trend line right here. And if it breaks, pullbacks continues, it might be interesting. Alrighty. Dollar CAD. Yeah, I was talking about 5 to 6 candles. 1, 2, 3, 4, 5, 6 is this candle right here with a wick, and we are getting a bigger rejection from that sixth candle and getting a bigger correction here, which was something we talked about because of the top, the divergence, the rising wedge. So price is at the target again, so maybe a bit of a pullback before going to the next target. Same like the dollar yen. Trying to break through this support trend line right here. Ultimately a bit tight, all these spaces. That might be interesting today, but let's take a look if there's something better. All right, Euro pound correcting up above the moving averages. Euro yen was choppiness yesterday. I didn't like the euro yen. And I don't think that anything changed compared to yesterday. It's just very messy here. Kind of made it inverse head and shoulders here. Broke out of this resistance. I think that yesterday I was saying that it could bounce, if anything, because there were some reasons like bottom of the channel, divergence between these bottoms, and eventually did break this resistance trend line. Took some time, but it's very slow. Pound yen, I said I like the break, pullback, continue. Same like the pound USD. In fact, the pound weakness, sending it to the 38.2 break and continue down to target, as you can see. So what about now? Well, still in this breakout. Becoming an ever expanding breakout now. At one point or another, we're going to make a bigger pullback. This impulse will not last forever. As you can see, all these candles are pushing, lower lows. Uh, most of them are low lows, strong candles to the downside, small candles to the upside. Nothing has changed as yet. This is candle 4, so that impulse is still continuing. So we got to look at lower time frames to see if there's any notion of divergence between these bottoms. And really not yet on the hourly chart. 30-minute chart. Well, maybe a bit. Slightly. 50-minute chart probably has it. Well, not really. Funny. Interesting. Well, if it's that tight and that close, I wouldn't count on it necessarily. So, not very strong evidence here of exhaustion to the downside. So perhaps one more downside yet again could happen before we get a bit of a kind of a how do you call it, a hook back or retrace. So something like this perhaps before we get a bit of a retracement. And then what? Well, if we get a break like this and a hook back, and we broke this channel like this, and overall it's maybe a range like that after an impulse to the downside, I don't think it's strange to see maybe one more move, at least to challenge these bottoms. So probably more downside after that. And yeah, that's for the distant future. For the moment, is this downside interesting? Pound, of course, always a bit tricky at the beginning. Now making a bit of a break, so it's the same like the pound USD in a way. Looks good like a short, but where's the stop loss? That's always at this moment I think the most difficult part. One option is a tight stop loss. The other option could be above the trend lines and the moving averages, but then stop loss is very big. It's already 150 pips. So maybe a 4 hour chart will be the solution again, just like the pound USD. Waiting for this 4 hour candle to close might be the best in knowing whether this kind of consolidation top here is sufficient. All right, pound New Zealand also lots of downside momentum yesterday. Euro New Zealand, I said it would be good short if it came up to here. It didn't, unfortunately. It did try to get there, just failed to make that last push before indeed making that fall. Still looks bearish though. And I'll keep an eye on this particular pair um, as it maybe retraces a bit deeper. I think that still that same target could be something. Now the minus 272 target as well, by the way. Um, even levels like here, I would have. I'm not necessarily putting a pending order, as you can see, because I think there are too many levels to deal with, which could act as resistance and be a turning spot. Ultimately, I think there is downside potential when considering momentum, bull flag, bear flag, break, pullback continues. So I think that environment is still there. unless it really breaks above probably this top. So I'm going to keep an eye on, I'm not sure yet, maybe the 4-hour chart yet again. Euro never broke this resistance and still made one more lower low. I'm not a big fan of this up or downside because there is divergence. So still waiting. Would like to see price above these moving averages, break above it and hook back to it. Otherwise, it's not interesting. Pound odd. Same story. Pound weakness probably going to continue. Maybe one more time, but then I would be definitely careful, especially this week, because then you're already seeing significant pound weakness and a bit of a pound relief rally or correction at least should definitely be something to consider that could happen. Alrighty, let's see. Aussie strength we saw against the USD, but we know that price is at the target. So maybe there's another Aussie that might make sense. Not the euro that much. Odd. Pound odd. Is probably just like the other pound pairs in a potential breakout to the downside. So that could be something as well. Maybe keeping an eye on this 4-hour candle just like the others could be the best. Now let me take a look at other housing pairs, see if that's something interesting there. Pound odd definitely very weak because we've seen pound weakness and Aussie strength. So definitely an uptrend at the moment, but at the long-term moving average. In any case, it doesn't look like a good place to go long right now. Very slow upside. I don't think that is that interesting. Let's see if there's anything else. I think all these Aussies have a bit of the same kind of vibe to them. Yes, they have moved up already. Are they at good spots to trade right now? Probably not. Not at the moment. DAX, bit slowest price action at the moment. Breaking this trend line. And this is a hook back from our upside, or was this a false break? I think probably to answer that question, let's see, price, if it breaks below the 50, that could be a failure. But if it stays above this 50, and specifically, I would say if it breaks above, we'll probably see is something like this happen. So if it breaks this next fractal, it'd probably be more of a breakout to the upside. Gold making a double bottom within double bottom. Personally, not that interested in it. Market's in a bit of an awkward technical position, I think. Right at resistance, not an easy spot. All right. Any other currency pairs that I might have missed? Some exotics perhaps that we didn't go through that you would like to take a look at? Any trades that you're in that you want to talk about, or any setups that you've found maybe perhaps interesting, and I didn't see, or you see it differently? Anything you want to take a look at for your personal trading, perhaps? As I wait for potential answers or questions from you, be aware that tonight Nana's going to take a look at Price Action Trading School questions and answers. It's going to take a look at the first 5 sessions. So if you missed anything, or if you have any questions, or you just want to like review the material from the first five, tonight is the prime occasion to do so because it's always good to rehearse that stuff. Even if you saw all of them, I would say it's good as a kind of refresher. Um, but if you missed any, then this is your chance, or if you have questions. Tomorrow, we got trading Forex via range bars. We're not going to take a look at candlesticks like we always do, but range bars. And next week, we got a new cycle again with a weekly recap, fibs and waves, trading school, um, and strategy too, of course. And there's a lot of content on besides the website, by the way, there is a lot of content on the YouTube channel. For instance, this Wall Street crossover show and other things that you will find. So that's you just go to YouTube and Admiral Markets, search for Admiral Markets, and there's a lot of content that's there available as well. All right, U.S. indices. I got a good suggestion from Beverly. Oh, indices, not the U.S. dollar index. Sorry, got them mixed up. Well, it does seem that the dollar index is in the breakout. Big momentum to the upside. Big consolidation. Breakout. It's all about this top now, I guess. Seems very much similar to the euro dollar, but then, of course, a mirror image. Let's take a look now at the indices that I just shortly was looking at before. And yeah, only thing I really said is that they were looking in an awkward position, basically, is what I said. So I think this is a tough situation. I um, I don't know. It seems like a 50-50 coin flip to me, to be honest. I think that both Bulls and Bears could say a lot and have probably very fair points. So I will probably say it's both are equally likely. I don't know. What do you think? I think it's a tough one because you're right at resistance. Of course, you had a big uptrend prior to that. You've had a significant rebound as well. Then again, we haven't seen such a correction like this long in a very long time. This is candle number 6, so I would say if the break of this top doesn't happen this month or next month, then we might see a bigger correction. It's a difficult one. I don't see many options to trade here in general. Same with the Dow Jones, really. All right, let's take unless anyone has maybe a comment or question, I will probably move on to the dollar CAD. Yeah, indeed. The huge drop was, of course, quite unique because we didn't see something like that for a while. As I said, let's see. This was a pretty big candle. So, gotta go back quite a while, even maybe to the financial crisis before you see such a candle. Now, that, of course, could happen. It has been a big rally. So, and, after some weeks consolidation here, you can see that was actually a pullback, kind of a weakness pullback here with a higher low. And we had a good rally. But yeah, indeed, now it's too much of resistance. And yeah, uptrend could continue, I think, but wouldn't speculate on it right here in front of resistance. Yeah, right, no problem. Let's see. Well, I had two large drops. The second was bigger. Yeah, I think that's very difficult to say at this moment. I mean, it's I would really say this is a tough one. I would rather wait on the sidelines than it. Yeah, I would say cautiousness is in general probably good in this case. Dollar CAD, I think I can see is at double top. I can see it's in an uptrend, but at the same time, it's a rising wedge formation. And at the same time, hang on. At the same time, we're in one, two, three, four, five, six, seven, eight. So from a weekly point of view, I think we're more in a reversal territory. We have a rising wedge on lower time frame. We're at a double top. So I think that this is from that point of view, yes, it is an uptrend, but I think we're more in a reversal stage, as indicated yesterday already, that could happen. And I think we could see that reversal or retracement at least continue a bit deeper. So from that point of view, we're trying to break the support trend line or right at it. So that's a question mark. But this could be just a simple ABC correction and that's it. So there are reasons to suggest that this could go further down and make a bigger retracement, or maybe it's just a very shallow retracement like that. So um, I think that shorts somewhere in here we're okay and risky because it's a reversal, but we're okay now. We're back at support. And the question is, will we make a bigger rally again or will we fail somewhere in here? So I'm going to keep an eye on probably this fib and see if we do see some failure somewhere in here. Take a look at candlesticks. Is there any sign of that? And might be worth a reversal, small risk. I might think about taking a stab and seeing if so-called stab and attempting perhaps a small position for a reversal short here. More conservative fib could be maybe this. Probably this is the target. The other option could be, because price is at support, is maybe to wait for a small pullback here and wait for a rally up to that 50 pip. But I think that, I don't know, I'll be cautious. Too many. It's possible to go long, but there are a lot of reasons to see a potential reversal. So that makes me a bit apprehensive. All right, let's take a look at the majors again. For what exit am I thinking about EU long? And I would probably leave it like that. I don't think anything would change in my opinion. As long as it stays in this channel, it could bounce back up. And if it's at break even or a small profit or maybe even a small loss as you have it, then depends. If you would like to take the risk, you can move it to break even too, of course. If you want to eliminate all risk, but I don't know. Let's see 30 minutes from now. I mean, if this is an engulfing twin bearish candle, it could be a heads up. So if it could be a reason to close it. That's true. Then again, from our point of view, breaking this trend line is not going to be easy. This resistance. So getting a bit of a pullback before it perhaps continues is also not so surprising. So I think still keeping it here at about that break-even spot and seeing if this channel can hold probably makes the most sense. All right, pound is showing a bit of weakness with the downside here, making a kind of a triangle. So if anyone took that short, you might want to put it to break even. If you were looking at the 1 minute chart and you took that short right in here, might be worth it because to put a break even because it's a triangle now. Either that triangle breaks to the downside or if it breaks to the upside, there could be a bit bigger retracement. The CAD, can it break the top, this daily top? Yes, it could. And let's see on the monthly chart. Pound dollar is right at entry. Yep, 98. Moving down again a bit. So it depends, of course, how much patience you want to have with the trade. I mean, if you took it maybe a bit lower, you might want to wait a bit still. If you took it right up here, you could probably move it to break even because then you're above this top. So that depends also. There's nothing wrong with waiting for this hour to finish. Let's see, and putting it above this hour high, for instance, as well. If this hourly candle turns, hopefully it's bearish. If it turns bullish, it could be a triangle finish, A, B, C, D, E. Let's keep an eye on it. Or maybe just using these 50-minute tops could be good. I mean, if we don't break through this bottom, then something fishy is going on. This is a bullish candle. We would like to see that support break and continue. If it takes too long, then we might get a double hook back to the trend line or even higher. That's why I said 4 hour chart, if you want to be a bit more relaxed about it, could be good to keep out eye on this 4 hour candle. So yeah, dollar CAD, let me go back. Yeah, it could definitely break. I mean, a monthly chart, it's in uptrends, it's an impulse to the upside. Target could be this 141 and minus 272 target. But what I don't like about it on a weekly chart is that we're making a pretty sizable correction here with an impulse here and a slow upside here and the candle number here, which in my opinion is in a corrective phase. Anywhere between 6 and 13 is corrective on average. Of course, there are exceptions, maybe many exceptions, but on average, I would say that's a fairly decent rule that has worked well for me. That's why I'm hesitant with the upside, and I'm not expecting a break now, but it could happen a few weeks from now. So it's more technical arguments at the moment that I expected maybe a bigger correction still. So are we getting the break? Let's see. Well, it's trying. That's the good thing. And getting very close. Let's see. It's a pretty big rally in the Asian session for the pound. Six more minutes left, and I'm very curious how this pound makes it. Of course, these last 5 minutes really will say everything about how this candle closes, and that's always a bit interesting with those candle closes. Sometimes last 5 minutes, dramatic things can happen, and a candle can totally look different than it has been looking throughout that hour, and that's of course valid for any time frame. The last 15-minute candle has the most impact, maybe on the 4 hour candle too, and the last hour candle, maybe in some cases on the daily candle. Maybe that in that case a bit less often, but so I'm curious about how this pound USD will close 5 minutes from now. If it looks something like this, for instance, then I think the breakout is looking pretty good. I would say pretty good odds. If it closes bullish, despite maybe the wick on top, then I'm having a bit more reservations. looks like we're slowly kind of inching below that support, and now kind of putting a break of a pip or two below it, I guess. Oh, that's what we wanted. Very nice, perfect. That's already a couple of pips break. That's perfect. So we got a break of that support now on the 5 minute chart. That we can see that definitely. And it looks like that was indeed a pullback. And one of the reasons why I was hesitant about it was just because the timing of the moment that just after London Open, which I always find unpleasant, but now looking good indeed. 4 minutes left, but pretty good. So even a minute chart, I know it's at that time I was already saying it's funny, but in a way, if you're looking for a small pullback, I mean, if you're looking for a pullback and you're looking for the first clue of a turnaround, sometimes it works. But be very careful with that. Obviously, I'm not advocating that to use it all the time, only on rare moments. Um, and it was a 61.8 fib here, so we can use that fib as well to see maybe intermediate targets at 150.70, but that's not really the main target, right? A bit lower below this bottom is the real main target. It depends if you had a tight stop loss and someone took a trade at 98-ish, it could be worth taking this profit because it's already decent R2R. Of course, that's an option. But if you have a bit more, if you want to get a bit more out of the trade, and going for the bigger target is also good. Okay, 2 minutes left. Your dollar, yeah, not looking as good. Now that the pound is breaking, but the euro, yeah, it is making some gains against the pound here. Has some space left towards the moving average, so the euro might not really follow along that much with the pound, and who knows, maybe still has a small kind of chance of making a bounce here in this channel. It's a certainly a kind of a difficult spot because there's resistance and then again there is that kind of smaller channel to the upside. So okay, a few seconds left. So we'll take a look at how this closes, but looks like it's going to be bearish. Hope to see you in the webinars later tonight and tomorrow night. And yeah, if you like, once again, Trader's Blog, potential there to take a look on Sundays and Wednesdays probably will be the days. And also, of course, you can take a look at Ivan Market Supreme Edition if you want more info on that. Right, go to ivanmarkets.com for other analytics as well. So this ended up bearish with the wick on top, and well, can't complain about it. Obviously, it looks fine. Will it continue down? We really never know. Of course, this is trading, but I think it's a decent probability. And with a tighter stop loss, the R2R is pretty good as well. And with a looser stop loss, it's still about a 1-to-1, a bit more actually. So I think it has decent probabilities of continuing lower now. But once again, this is the third breakout to this week. I wouldn't take any more after this. I would seriously look for exiting shorts when it breaks this bottom and reaches those support levels because uh, pound weakness has been doing pretty well this week, but at one point in a time, it's probably going to make a retracement. So something to be very cautious of as well. And in general, it's not a foregone conclusion it will make that downside right now. There's always a chance it can go to the 38.2 fib. That could still be a good resistance spot, um, even despite what looks like good price action. But keep an eye on these hourly candles. Probably if there's a small bullish candle like this hour, that could be reason to exit at break even, by the way. And also keeping an eye on this 4 hour candle. If this 4 hour candle closes something like this bearish, could be a reason to take a short upon, in my opinion, for my own trading upon the retracement for further downside. And trail stops, well, candle highs, excuse me, fractals on the hourly chart. Those are all potentials. TPs at support or market exits. Time factor could be used too as soon as this basically hopefully starts pushing, but then doesn't push further after 5 to 6 hours. Could be worth a market exit. So those all, I think, all the angles I can imagine at this moment, depending on how things go. If 4 hour candle does not close bearish but has a wick on bottom, could be good to exit. Uh, shorts that are taken here, shorts that are taken here, still worth staying in, I would say, until the fifth or sixth candle does not break this bottom. Then it could be worth exiting for profit as well on the first short here, or yesterday's short. The first short I actually talked about was in the video on Monday here. Sorry. All right. If you have questions, you can always email me, by the way. And so those are my 2 cents. That's my view. Thanks for joining, and wish you all good trading today. Cheers, everyone. Thanks for being here.